As of the market close on Friday, March 20th, 2026 at 4 p.m. EDT, SWMR Inc., trading under the ticker symbol SWMR on the NASDAQ, sits at a price of $36.71. This represents a significant intraday drop of $15.84, or a staggering 30.14% decline from the previous session's close. While the market is currently closed for the weekend, the volatility we saw during Friday's session was nothing short of a roller coaster, with the stock swinging from an intraday high of $55 all the way down to a low of $35.11. What most people are looking at right now is that massive 30% red candle and thinking the party is over for this high-flying drone tech IPO. But here is the part that might surprise you. Despite this brutal sell-off, the stock is still trading more than 630% above its $5 IPO price from just a few days ago. The reality is that we are witnessing a classic blow-off top scenario, where the initial hype from its Tuesday debut has finally collided with the gravity of a $675 million valuation for a company that brought in less than $400,000 in revenue last year. The expectation was that the momentum would carry it to $100. The reality is that the market just realized the math doesn't add up yet. When you look at SWMR stock right now, you have to separate the mission from the multiple. The narrative driving this move is incredibly compelling. A company born in the heat of the conflict in Ukraine, providing autonomous swarm software that has allegedly powered over 100,000 combat missions. That is the kind of battle-proven tag that investors usually pay a massive premium for. However, when you dig into the filings, you see a company with a net income loss of over $8.5 million in 2025 and a price-to-sales ratio that, at its peak this week, hit over 2,000 times. That is not a typo. For context, even the most expensive high-growth names like Nvidia stock or some of the speculative AI plays rarely see multiples in that stratosphere for long. The trading volume on Friday tells a story of exhaustion. We saw over 6.25 million shares change hands, which is double the actual float offered in the IPO. This means the entire supply of available shares is being flipped multiple times a day. This isn't institutional accumulation. This is a battlefield of retail traders on the Robinhood app and short sellers trying to find a floor. When a stock has this much churn, it usually means the conviction of the holders is paper thin. People are looking for investment help on social media rather than looking at the S1 filings. If you're using platforms like Fidelity or Interactive Brokers to track institutional flow, you'll notice that the big money has largely stayed on the sidelines, waiting for this speculative dust to settle. Let's look at the mechanics of the business itself, because that is where the tension between expectation and reality gets interesting. SWMR isn't a hardware company. They don't build the drones that you see in the news. Instead, they provide the brains, the software layer that allows one operator to control hundreds of drones simultaneously. The expectation is that this software will become the universal operating system for autonomous defense. The reality is that they are currently reliant on a few specific hardware integrations and are burning through about $700,000 in cash every month. While the $14.7 million they just raised in the IPO gives them a decent runway, it doesn't give them forever. They are in a race to turn their battle-proven software into a scalable recurring revenue model before the cash runs out. For those of you managing your own individual brokerage accounts or using a SoFi robo-advisor, the question is whether this 30% drop is a buy-the-dip opportunity or the start of a long slide back to single digits. To answer that, you have to look at the catalysts. The company has teased a major new product release coming in mid-April. In the stock market, we often say buy the rumor, sell the news. But with SWMR, the rumor was so loud that the news might have been priced in at $60. Now that we're back in the $30 range, the market is essentially recalibrating the value of that upcoming announcement. If you look at the broader landscape of online investing right now, there is a massive hunger for defense tech. Companies like Palantir or even the legacy players like Lockheed Martin have seen renewed interest as global tensions rise. SWMR is trying to position itself as the nimble AI-first alternative to these giants. But remember, the smart friend advice here is to look at the float. With only 3.45 million shares issued, any small shift in sentiment causes a massive swing in price. This is exactly why you see such high volatility on the Robinhood trading platform compared to more stable large-cap names. One of the most critical risks that the expectation crowd is ignoring is the potential for share dilution. The company just approved a 2026 equity incentive plan that reserves 5.4 million shares. That is more than the entire IPO float. While this is great for attracting top-tier engineering talent to Austin, it's a looming cloud for anyone holding the stock today. If those shares hit the market, the current price of $36.71 will face significant downward pressure regardless of how many missions the software completes in the field. I want to hear from you on this one because the sentiment is so split. Comment below how many shares of SWMR you are currently holding, or if you're waiting for it to drop back to the $10 to $15 range before even touching it. Do you think the Eric Prince connection helps or hurts the company's long-term standing with institutional investors? Looking ahead to next week, the key levels to watch are the $35 support mark and the $45 resistance. If the stock breaks below $35 on Monday morning, we could see a rapid move towards the $25 level as the latecomers to the IPO rally throw in the towel. On the flip side, if the volume stays high and we see a bounce, it could signal that the retail army isn't done yet. But let's be real, at a 2,000 times price to sales multiple, you aren't investing in a company, you're betting on a headline. The story of SWMR so far is a perfect example of what happens when a valid, world-changing technology meets an irrational market. The software works, there's no doubt about that. It's been tested in the extreme conditions possible. But the stock price grew much faster than the business ever could. When the expectation of $100 shares met the reality of an $8.5 million annual loss, the result was the 30% haircut we saw on Friday. For the self-investing crowd using Interactive Brokers or Fidelity Wealth Management, the takeaway here is caution. This isn't a set-it-and-forget-it ETF. This is a high-stakes game of musical chairs. The company's goal is to become a vendor-agnostic leader in drone autonomy, and they have a first-mover advantage that is hard to ignore. But as we've seen with other hype stocks in the past, the path from IPO to industry leader is rarely a straight line up. In summary, the expectation was a clean breakout to the moon based on geopolitical tension and AI buzz. The reality is a fragile micro-cap company with high burn and extreme valuation risks. Friday's drop to $36.71 was a wake-up call, but for those who believe in the long-term shift towards autonomous warfare, it might just be the first chapter. We have a massive disconnect between the combat success of the product and the financial health of the balance sheet. Until those two things start to align, expect the volatility to remain off the charts. Whether you're trading on the go with the Fidelity mobile app or sitting at a professional terminal, keep your eyes on the volume. That will tell you when the real players are entering the room and when the speculative swarm is finally moving on to the next shiny object. Would you like me to analyze the specific competitors in the autonomous drone software space to see if their valuations are more grounded than SWMR's?